Bitcoin is back above 70,000. Bitcoin's daily MACD is showing positive momentum returning to the market. And we're also seeing a bullish signal pop up on the 4-hour RSI, a possible continuation signal. And on the weekly chart, I want to talk about the possibility that Bitcoin may be about to confirm this zone as base 4. And the total 3, the altcoin market cap, is currently 2% away from a new yearly high. All of this and more in today's video. What is up, guys? Welcome back to the channel. My name is Kevin Svenson, and today we have a lot to talk about. Bitcoin trading right around 71,000, pumping as I'm making this video. Before we fully jump into the Bitcoin chart here, I want to mention that the total 3, the altcoin market cap, is currently 2% away from a new yearly high. Bitcoin is currently about 4 or 5% away from a new yearly high. So the altcoins are a little bit ahead of the game here. They had less of a dump than Bitcoin and a faster rebound. Things could get really bullish for the altcoins here really fast. We are not far away from seeing a full-blown altcoin season take place. If you're going to compare it to 2020, 2021, it was basically the beginning of the year, January or February of 2021. That is basically where we are now, in my opinion. Most of the altcoins, it doesn't matter what technicals are showing on their chart. Bitcoin will decide what happens. That is for most of them, not every single one, but majority, Bitcoin is the leader. So it's important to keep up with the Bitcoin analysis. Yesterday on Twitter, in the morning, I posted this chart. Bitcoin was below the resistance line and the MACD was starting to show that we may be getting positive momentum returning to the market. And now Bitcoin is showing that. You see these histogram values are starting to increase, and it looks like we may be looking for a cross up. It is a really similar setup to the Bitcoin ETF approval / rejection. When the ETF was approved, we had to sell the news event. The MACD began showing positive momentum, and once we crossed up, it was up and away. And we are in a very similar situation. Bitcoin sort of trickling down, MACD showing positive momentum here, and now we're breaking above that resistance. And is it going to be up and away? Well, it seems like it. It seems like we're just getting continuation patterns, which are sort of repeating patterns in a trend. Bitcoin's 4-hour chart, the RSI, is showing us a sort of repeating pattern, a continuation pattern. The price comes down, the RSI has a downtrend, we break it, price goes up and away. RSI has a downtrend, we get above it, we break it, price goes up and away. And once again, RSI downtrend, we break above it, and price goes up and away? Question mark? Well, it seems likely. It seems like this is just another bullish continuation pattern for the 4-hour RSI. The percentage gain from this RSI breakout to the next high on price was roughly 33%. And from this RSI breakout to the next high in price, it was roughly 39%, 33%, 39%. You could just say an average of about 35%. So if we got the same type of thing going on here for Bitcoin, it would bring us to roughly 91,240. If you are a regular viewer of this channel, this should be a very interesting target because that is right around where the textbook is suggesting we're going to find the next target for the parabolic trend. So the textbook target of the parabola is 90,000. And the 4-hour chart RSI breakout extrapolation is right around 90,000, you could say. So there's a lot of things now pointing to that price zone as being a major target. It's also coming in just below the $100,000 psychological level. If the price of Bitcoin was running up towards that price of 90,000 or just above 90,000, the price is going to be going vertical at that point. A vertical target would be hit. And most of the people, the masses, the retail traders are going to be FOMOing. They can't resist. Bitcoin might go above 100,000. They're going to have no control over themselves. They're just going to be clicking the buy button. That's how human beings are. And if we get to that area, it's going to be, again, vertical, and there's going to be tons of FOMO. Well, that is a perfect condition for major whales to sell, because they need all that liquidity. They need all of that enthusiasm, all that buy interest, people flooding into the market. That's what they need to sell their giant bags. So I would not be surprised to see major players selling into that environment. And something like that would be healthy. And it would be a 2017 style pullback where you have this massive parabolic trend and then we have a huge 40% rejection, followed by a major push into a continued parabolic trend in a few months. And this could be a post-halving dip scenario. And there is also another interesting thing on the weekly chart that I want to point out. Another variable lining up. If you look at the 20 EMA on the weekly chart, it is above a 45-degree angle, which means we have major momentum. And you can see there is this weekly candle here. This major rejection candle on the weekly right here. This candle is showing a major wick above it that is 45% or more larger than the candle body, which means there are a lot of short positions sitting inside of that wick, which means that if the price breaks above this wick high, it would mean all the short positions inside of this candle would be trapped. That is a trapped liquidity setup if we break the wick high. And if you measure a 1 to 1.5 risk reward ratio of the size of that candle, that lands you at 87,500. So the textbook trapped liquidity short squeeze setup is giving us a target that is just below 90,000, 87,500. So that is another area of interest, a zone to definitely keep in mind. That is the trapped liquidity short squeeze target for this weekly candle. This is the target candle. And according to the textbook, when your EMA is up above a 45-degree angle and you have a rejection candle within a trending market, if the price gets above that wick high, it translates to 1 to 1.5, which lands you at 87,500. That is a technical target. So that is one. You could place an order there. You could place an order at 90. You could place an order at 95 and sort of just layer in sell orders rather than, just picking one. Right? Because it makes it less likely that you're going to actually sell if you only do one order. Just wanted to put that out there. Now, I'm personally somebody that is going to be taking partial profits at our targets. I'm not going to be getting out of the market, right? I would just be looking to take, 25% profit and then generally just wait for some sort of, even if we might go higher than that. I mean, maybe we go above 100 after we hit 90 and everyone goes, oh, Kev, you were wrong. Oh, look, we're above 100. And then at some point we get a huge correction and a consolidation. That's where I would look to reaccumulate with the profits that I take before the continuation of the bull market. If you guys want more of an inside look into the profit taking process, what I'm going to be selling, how much, which coins I'm selling, altcoins, all those things, join the Patreon today. As the bull market progresses, I raise the price to limit the amount of people coming in, but you can lock in this price today for a lifetime. So take advantage of it while it's there, and I'll see you all in the next video.